Good day, Tea with Travis. Unfortunately, today is the memory of September 11th. I'm sure we can all think back to where we were that morning. I remember I was single at the time, living with a roommate. I was a police officer, and my roommate came and woke me up. I'd work swing shift, and the last thing I wanted to do was get up at 5:45 in the morning, or whatever the first attack was, and he'd woke me up and told me the whole story. It just seemed so surreal watching the towers come down and then everything that followed up after that. So hearts go out and prayers go out to the families that are still have that dreadful memory in their minds, and just how it changed the face of America. So hopefully he can take some time to have a moment of silence or pray for those fallen on September 11th, 7 years ago. On a brighter note, mortgage-backed securities are flat even this morning. They're not up, they're not down. They were actually down a quarter in fee earlier this morning, but they've bounced back, and the reason for that is a few things. Oil is about to break $100 a barrel, so we're down at 101, down from 157 back in July. So I mean, when you slash 50% of the value, or that amount in just the last 6 weeks, is pretty amazing. So oil pressure's down. The dollar is rallying against the euro. The European market is struggling in finances. We talk so often about how bad the U.S. economy is struggling. This is not unique to us in the U.S. We're having a global economy crunch right now, and we're not looking too bad actually when you look at the numbers and go deeper in inflation in Europe and other markets. So we are on a rally, so that's good news. The bad news is initial jobless claims were way up this morning, higher than expected, and we're all the way back to September of 2003 to have this high of unemployment number. So challenging times for our economy, but rates are low, oil's low, so there's some compensating factors that are really interesting right now. We've seen just a huge fluctuation in mortgage rates and how they've reacted since Monday when Fannie and Freddie Mac were taken over. We had the huge gain in value, meaning the lowering of rates on Monday, and we've pretty much stayed even since Monday. We've had drops and rises and drops and rises, and we're pretty much even since Monday. So still wonderful rates. Right now, it's definitely encourage you to, if you've been at all hesitant to buy right now, the housing prices have dropped so much, mortgage rates are at nearly four-year lows. So this is definitely a good time to look at. The only other thing right now that's going on in the stock market, and probably going to go red here in a minute, they were up this morning, but Lehman Brothers, the fourth largest investment bank in the world, was downgraded this morning. Their stock value is downgraded. That's the last thing you want as a stockholder, is to have your stock devalued. But they are down from $67 a share back in November to $4.50 this morning. So $67 to $4.50. How'd you like to have that investment? So that's just a sucker punch to the gut, to the stock market. Again, traders are nervous, so not a lot of activity between the festivities, not festivities, but the memorials going on with in New York today near the stock market, as well as the things going on around the nation. It's just going to be a slow trading day, I feel. So if you haven't locked in by Monday, I would lock in right now and take that bias and go ahead and lock in. Other than that, I think that's it for today, unless something else happens across the world. But I'll update you tomorrow. So have an awesome Thursday. We look forward to serving you, and be blessed.